Well, yes, Shruti, thanks very much for that. We'll get back to your guest in just a bit. But, Bain Company's latest India Venture Capital report points to a rebound in India venture capital market, with funding surging 1.4 times to about $13.7 billion in 2024. And that was led by consumer tech, SaaS and AI. Deal volumes also rose 45%, while public market exits dominated, with IPO valuations jumping 7 times to 76% of total exits. However, fundraising did decline by 35% to $2.7 billion, and that reflects some cautious capital deployment. Now, going ahead, the report says regulatory reforms, deep tech, and energy transition are poised to shape the next phase of startup growth in India. For more on the key highlights from this interesting report, joining me now is Aditya Muralidhar, who's associate partner at Bain Company. Aditya, thanks very much for your time here on Startup Street. The VC funding rebounding that you spoke about at $13.7 billion in the report. Briefly tell our viewers, what were the primary drivers, what's changed in the year, and how sustainable is this trend going to be going into 2025?
Yeah, so if you look at the 2024 rebound or the increase in the deal activity, I'll break it down to 3 key factors that drove this. Getting into the year, there was ample dry powder or capital that was raised but not yet deployed in the market. This was on the back of what we saw as historical large fundraisers in 2022-23. The second factor was the year saw an influx of very high quality assets that withstood the test of the funding winter that we saw just a year or so ago. Those assets saw relatively larger deployments of funding, as they showed both the ability to scale while improving their profitability or showing the paths to profitability. And the third aspect that drove the increase in deal activity was just a reset in valuation expectations between founders and investors that helped with the deal making. I think a case in point to the point that you made, Ritu, is this increase in deal activity was seen in the fact that majority, if not all of the growth that we saw in 2024 was led by a rise in deal volumes. Now, that's an interesting question of what we expect for 2025. I'll take a step back and just looking at the investor interest in India, that is expected to persist in the medium to long term. The domestic fundamentals are resilient. The digital infrastructure that we have is frankly unique, evolving and fairly at scale. And the regulatory landscape has also been progressive, all of which are great markers for a thriving ecosystem. Now, looking very specifically at 2025, the first couple of months have been a bit soft, but in our conversations with investors, there is a very clear intent and appetite to deploy in India, and hence our expectations is that deal-making activity will increase as the year progresses.
All right. Aditya, interestingly, this valuation reset that you're talking about in your recent conversation with investors as well, funding activity also, your report talks about falling to $2.7 billion. Do you see any meaningful pickup this year?
On the aspect of fundraising or the $2.7 billion that you alluded to, I'll probably give a little bit of context over there. Fundraising, I would see a little bit differently and separately from the investor sentiment. Fundraising from a domestic context is influenced by how much dry powder there is in the market. So in 2022-2023, we saw very large fundraisers, but on the back of that, the deployment in the market has been slower, driven by macroeconomic factors. Now, with the abundant dry powders that the top VCs had, I don't think they saw a need to raise any further. There is a more global reason as well, where limited partners have seen a slowdown in their distributions and hence have reduced the net new allocation. So these are the factors that contributed to the fundraising slowing down to $2.7 billion. It's not really reflective of the investor sentiment in the market.
All right, and what kind of dry powder are we talking about here that is available for deployment? And also, in terms of investor focus, consumer tech, of course, was a big theme last year. Sectors like fintech saw some reduction. What's expected going ahead?
Yeah, I'll actually talk about the consumer tech surge, which was a fairly interesting theme. I think what we saw in this sector is what we describe as flight to quality, or investors deploying larger amounts or disproportionately larger amounts in companies that have grown well, but have also shown clear paths to profitability. A case in point, when you look at consumer tech, just the top 4 companies captured about 85% of the funding in that sector, of course, led by Zepto. But if we take a step back from the top 4 companies and we look at the $100 million plus mega deals, 2024 saw a quadrupling of the mega deals, which again reflects the same sentiment. The interesting point to note over here is historically, we have seen some of these larger deals concentrated in one or two subsectors, for example, say B2C commerce. But in 2024, we saw these large deals spread out across B2C commerce, health tech, travel tech, gaming, which also shows the widening of the space. And just going forward, investors have a fairly positive outlook for the consumer tech sector.
All right. Interestingly, the report also talks about IPO exits surging 7 times in value and making up 76% of total exits. I mean, that has been one of the big concerns when you speak to VCs globally when they look at India. Do you see this sort of settling as a long-term trend, or do you think public market sentiment could shift again?
Yeah, it's a great question. Just one small correction there. The 75% was more public markets in general. IPOs specifically contributed about a fifth of the exit values. So 2024, this activity was fueled by just rising liquidity. There was a recovery in tech stock valuations, and there was a backlog of deferred IPOs from the prior years. Looking at 2025, I'll start by saying that there's a pipeline of notable IPOs across consumer tech and software and SaaS as well, amongst other tech-first sectors. But just seeing how the year has panned out, and there's been a little bit of softness, I think it's a bit of wait and watch to see how this shakes out. But that said, just conversations with investors, bankers, and lawyers in the space indicates that there is a very clear intent to keep the 2024 momentum going as the year progresses.
All right. And of course, the big talking theme all of last year has been generative AI, and we also saw investments growing 1.5 times. Yet most of the funding that happened went to applications instead of infrastructure. What does that really indicate about India's positioning in the global AI landscape?
Yeah, I think I would describe that as it's a bit reflective of the supply. India, of course, is known to have a very strong developer base with fairly deep application development experience. I think if you look at platforms like GitHub, India is the second largest community. It's probably one of the fastest growing at the scale, and maybe in 2-3 years' time, it'll probably become the largest community as well. In contrast to application AI or application development, if you look at foundational AI, the fundamental need for capital is higher. It requires greater infrastructural access, and the ecosystem for exploratory R&D just needs to be a lot deeper. Turning our eyes on what's required to really keep this innovation going. Number one, to the point that I just mentioned, there's a real need to boost deep tech R&D. There's a lot of the government funds that are coming up and thematic funds that are very focused on the sector, which of course will help fuel innovation. There also needs to be greater GPU access when you talk about foundational AI innovation. But just as importantly, there's a need to develop a talent pipeline that is focused on AI innovation or foundational AI innovation, depending on what we're looking at. And for this, it's very critical to foster the collaboration between academia and the industry.
All right, Aditya, we're going to have to leave it at that. But thank you very much for helping us decode this interesting report here on CNBC-TV18. Many thanks.
Thanks so much for having me, Ritu.
Also on what's brewing